Right, but with this, let's move on and let's put the spotlight on shining gold because that has definitely created history. And if you wish to buy a gold, 10 grams of gold rather, then you have to pay over a lakh for it in the physical market, including GST. But the big question is that what is fueling this rally? Let's get in Ashesha, who is here with all the details of what exactly is happening when it comes to gold as a commodity.
Well, yes, gold has indeed created history, and as you mentioned, it has crossed that 1 lakh rupee per 10-gram mark in the physical market. So the last traded price stands at about 98,900 rupees for 10 gram, and with 3% additional GST, the price stands at about 1,02,000 rupees for 10 gram. Several factors leading the move, but let's also talk about global prices because in the global market, gold has crossed that $3,482 per ounce mark, and in the last just 2 days alone, gold prices have risen nearly 2.5 to 3% on a year-to-date basis. Gold is up nearly 30%, which is more than the returns gold had given last year in dollar terms. In calendar year 2024, gold was up 27%. This was followed by a 13% return in calendar year 2023. Latest trigger, of course, being the commentary that came in from US President Donald Trump with respect to Jerome Powell and with respect to commentary on interest rate environment and tariff war, which continues to escalate. Geopolitical tensions and central bank continues to buy gold globally. So these are some of the factors which continue to aid the move that we are seeing in the yellow metal. But apart from that, despite the up move that we have seen, global brokerage houses continue to remain very positive. Goldman Sachs continues to remain positive. They've given a target of $4,000 per ounce by mid 2026. And apart from that, monetary easing is also expected to be a positive, and traders expect at least 3 rate cuts in this calendar year. So several factors aiding the move, but for now in the domestic market, gold prices have crossed that 1 lakh rupee per 10 gram mark on MCX.
Okay, that's Darren Gold. And Kunal, you've been telling us for a while right now that better than equities in the near term is actually gold. How much more can it go from 1 lakh?
No, not better than equities, of course, yeah. But yeah, almost there, 1 lakh. This is a phenomenal move. Completely, yeah. I think, taken many of the people off guard. Because, I remember from 83, 84,000 when gold was trading at those levels in February or March, there was a point where, there was expectation that maybe gold prices would probably have hit the roof and we could be looking at, a bit of a correction or a reversal of sorts, but that's not happened. And I think now, the momentum is extremely strong. I looked at the historical instances when gold prices, they generally tend to top out or at least show signs of extreme overbought. That generally happens when you see quarterly RSIs for gold, both in terms of dollar as well as in terms of the rupee prices, hitting levels of 90 plus. Right now, we are still at 86.5 to 87 on the RSIs for gold on both these rupee as well as on the dollar terms. So I think that generally indicates that there should be more room on the upside for gold prices to move further.
So there could be some more headroom for the gold prices to move higher. But amid the uncertain and the volatile times in the markets, the only asset class that's managed to retain its sheen is gold. But amid the record peaks, is there merit in exercising some caution? Is a correction in sight over the near term? We spoke to a whole host of voices, from Chris Wood of Jefferies to Enam Holdings, Sridhar Shivaram, all going long on yellow metal with sounding warnings against a near-term correction. Let's go across and listen in.
I think gold could have a big correction at any time, but I think gold will be higher in a year's time. I would advise people with long positions in gold to continue to hold and just take profits at the margin. Obviously, if you own gold on leverage, you should take some profits, but gold's trading very well.
So what we were trying to say with the gold long was that bad behavior has its consequences, and people start to lose faith, especially in the currencies that central banks and governments are printing, paper money. So it was time to be much, much more aligned with the old-fashioned currency, the one that doesn't get printed out of existence, and that's gold.
I own gold and silver, and I bought more silver recently. Silver's still depressed. Those are two of the few. Well, I'm not buying gold because it's making highs. I hope I never sell my gold. I hope that my children own my gold someday. I am not selling my gold, even though it's making all-time highs.
Gold is extremely expensive in any metric. Of course, you guys all putting out this charts that Nifty has of course underperformed gold for last couple of 2 decades at least. Very expensive for a zero coupon infinite bond. It's very expensive. From an allocation point of view, it's time to be sort of super concerned about gold valuations now. So I don't think it's a time to dial up gold in any meaningful fashion.
Gold is up almost 50% in the last 1 year despite the correction that we are seeing. You can't have an asset class keep going up, one way. I'm a big bull on gold, but I'm saying that it's gone up too fast, too soon. So there will be some correction, but over a period of time, I'm still bullish on gold that this is an asset class which will do well, but it can't go up 50% every year.
All right, so those were the big voices when it comes to gold and where is that headed. But let's get back to the markets.